Ladies and gentlemen, you heard that. Questions into the chat so that Steve can take them near the end. But just quickly, ladies and gentlemen, please welcome Stephen Moore, co-founder of the Committee to Unleash Prosperity. He has served as a senior economic advisor to Donald Trump and was a member of the President's Economic Recovery Task Force. He is the author of Trumponomics, Inside the America First Strategy to Revise Our Economy. And Mr. Moore has served as a senior economist on the Congressional Joint Economic Committee and as a senior economic fellow at the Cato Institute, where he published dozens of studies on federal and state tax and budget policy. Stephen, thank you so much for joining us today.
Well, thank you so much. It's a privilege to be with you all again at the Money Show. I wish we could do this live and in person. I think hopefully very shortly we will be able to gather together again, as we have so many times. I think this is probably about my 25th presentation for the Money Show over the many years. So it's fantastic to be with you. And I thought what I would talk about today that could be helpful to you all as investors is a little background on what is happening in Washington, what Biden is doing, and how that might affect investment strategies and returns. And so let me start by saying that, just to, for full disclosure, I mean, my political biases are that I'm very a free market guy. I believe that government's least governs best, and that the government is out of control right now, in my opinion. And I think that is going to have a negative impact on our economy and on stocks. Whether that's going to happen in the next few months or the next couple of years, I don't know, but I do think there will be a correction coming. And I think it's because almost every policy that is coming out of Washington right now is exactly the reverse of what we ought to be doing if we want to maximize economic growth and we want to maximize the value of American companies. And so I don't say that with any joy. By the way, the market has been on a tear for the last number of years. So this has been an incredible bull market that we've been seeing. And incidentally, it's really the continuation of a trend that began in the early 1980s when the stock market hit its low point. The Dow Jones hit its low point in the summer of 1982 at 800. The Dow was at 800. And today we have a Dow at somewhere in the neighborhood of 35,000. That's one of the greatest periods of wealth accumulation and creation in the history of civilization. No nation's ever seen anything like this incredible ride we've seen in equity values and the value of American companies and the value of American assets like we have seen in this 40-year period. And obviously we want that to continue for another 40 years. But I think policy does matter. Obviously, we've lived through the technology revolution that has had an incredible impact on these new industries that have had spectacular rates of return. We now have 5 companies that are worth $1 trillion or more, which is just, it would have been unthinkable even 10 or 15, 20 years ago. And so will the wild ride continue? Well, I have some skepticism about that because of the policy mistakes we are making in Washington. So I've labeled this little presentation GOVZILLA. I have a book actually coming out by that title in just a few weeks, and I thought I'd highlight some of these charts. And as I said at the end, I'd love to hear comments and questions and criticisms. This is a freedom of speech conference, so we want to hear everyone's views. But I want to kind of walk you through what concerns me. Maybe it will concern you, maybe it won't, but these are some of the facts and some of the projections that we are making with respect to what's happening with government fiscal and monetary policy. So let's start with this. This is something that shows what happens if the Biden Build Back Better plan passes. As almost all of you know, I'm sure you're following this fairly closely, the Senate begins debate in the next couple of days about whether to pass the bill that passed the House weeks ago. Now, this is by my estimations, with honest accounting, and I think you all know the Congress is using fraudulent financing absolutely outrageous bookkeeping to pretend that this bill only is going to cost about half of what it really costs, because it's planting the seeds of all of these small, they start small, all of these new entitlement programs. And any of you who've been following the federal budget at all, even casually, knows that when we create these new entitlement programs, they grow and grow and grow. That's what happened under LBJ's Great Society. It's happened with Medicare. It's happened with Obamacare. More recently, the programs start fairly small and they grow in size. And that's not being taken into account in any of the bookkeeping we're doing. So to cut to the chase here, you can see from this chart in 2020, which was actually obviously an aberration year because we had COVID, and so we had a big expansion of the government, but I've corrected for that. And that's really the average of the last couple of years prior to 2020. The federal government was running at about 30% of our GDP. And if we pass this bill, it goes to 34% of our GDP by the year 2031. In other words, the government grows faster than the private economy. And then you get a huge increase in the size of government by 2040. And then if those trends continue, we're talking about a government a nation that is more socialist than free enterprise, that the federal government and all government would take over half of our resources away from us. And that, let's face it, that's a very, very scary picture. And what the Biden plan does is puts us on that road. It puts us right smack on that track in that direction. And so that's why it's so critically important, in my opinion, to defeat this bill, or if not to defeat it, at least to minimize the damage of this 2,490-page bill. So what would this mean for our debt? If you look at this chart, you can see, if you look at the right-hand side of this chart, you see that even if we do nothing, even if we don't spend another dime on all of these new social welfare programs, the forecast, the standard forecast from the Congressional Budget Office is that our debt will continue to grow. And that's obviously because of the aging of the American population. I'm a baby boomer. I was born in 1960, so I'm 61 years old right now. In a few years, believe it or not, I will be eligible for Social Security and Medicare and all these other programs, as many of you listening and watching this program. And so even if we do nothing, the debt is supposed to go to 200% of our GDP. That's bad. That's a very worrisome trend. But if you add on the Biden plan, that's the kind of pea green there, you can see that the debt goes up to 300% of our GDP. And that is a very, very worrisome trend. That would mean we would look like Argentina, and we would look like Venezuela and Greece and other countries have had severe, severe debt crises. So that's what I'm hoping to avoid for our country. We shouldn't be spending $2 or $3 trillion right now. We should be cutting $2 or $3 trillion from the budget. We should be cutting now that the COVID crisis is over. What does this mean for our kids? It means that every child born today, any of you, if you have a child under the age of 7 or 8 years old, or a child on the way, they will pay about $300,000 of debt by the time they're 30 just to pay for all this spending we're doing right now. That's not a very good legacy to leave for our children. It is. I laugh when I hear Nancy Pelosi and Chuck Schumer say, we have to pass this bill for the children. For the children are the one who gets screwed here, right? They're the ones who have to pay for all this enormous spending that we're doing right now that has very little return. I thought this was just interesting. And by the way, I'm happy to make any of these charts available to any of you. This is based on a presentation that I just created. So if you'd like to get either this presentation and or would like to get our what we call our Committee to Unleash Prosperity hotline that comes out every morning, and every morning it contains 1 or 2 of these new charts and a short analysis of what's going on with the economy. It's been very popular with people. Newt Gingrich emailed me the other day saying this is the first thing I read in the morning. And unlike Joe Biden's $4 trillion spending bill, this really is free. It costs you nothing. All you need to do is sign up for it. And if you want to sign up for it, it's, as I said, it's free. It doesn't cost anything. We want people to have it and spread the word. Email me, Steve Moore. My email is More, SMOORE, at FreedomWorks, one word, so it's smore@freedomworks.org. One more time, that's smore@freedomworks.org. And it'll take about a week or two to get you into the system, but then you'll start getting it regularly 5 mornings a week. And I think you'll enjoy it. Well, if you don't want to email me, you can just go to the website Committee to Unleash Prosperity and just sign up for free. You just have to give us your email and we will provide it to you. But anyway, this is one of the slides that we presented just a few days ago. And it shows, if you look, the Revolutionary War, Civil War, World War I, World War II, the Great Depression, the Cold War, et cetera. Every time we've had either a military conflict, or we've had an economic crisis like the Great Depression or the financial crisis that happened in 2009, we have borrowed money. The federal government increases its borrowing. But as you can see from this chart, every time the crisis is over, we start to pay down the debt, right? So that happened after the Revolutionary War. It happened after the Civil War, World War I, Great Depression. Look at how much the debt came down after World War II, when we spent trillions of dollars to defeat the Nazis and the Japanese. And even after the Cold War, the debt came down a bit. And what's being proposed now, which is such an aberration and so diabolically wrong, is we're talking about massive increases in government spending and debt, even though we're in an economic recovery. That makes zero sense. And I don't care if you're a free market guy, a Keynesian economist, it makes no sense for the federal government to be borrowing at a time when the economy is in a recovery. So this is the first time in American history that something this audacious has been proposed. And I think it's very dangerous. Okay, you can see if you just compare what we're doing now, the $12 trillion is the $6 trillion in additional spending Biden wants, plus the $5 to $6 trillion normal debt. You can see this compares with the costs of all of these other major events in the country. And what Biden is doing is, almost an order of magnitude larger than anything else ever spent by the United States government. So that is very, very frightening to me. I'm going to move on here. So this is just an example of what I was just talking about. Many of you will recall when Barack Obama came into office and we were facing right in the midst of that financial crisis and the housing meltdown, when the economy was in a very severe recession, Obama proposed about $900 to $1 trillion of spending. And at the time that seemed, I remember at the time we thought, oh my God, $1 trillion in new spending. We've never seen anything like that before in American history. And as you all know, the spending didn't work. We had a very, very, very weak recovery under Obama. And the economy just never really got much better. We got out of the recession, but we had a really, really, really weak recovery from the recession with continued high unemployment. And yet now you look at what Biden is doing, and these are the 3 spending bills. Remember, we had the $1.9 trillion spending bill. That was the blue state bailout back in March, where we gave New York and California and New Jersey and Illinois and all the blue states that had shut down their economy. We gave them massive amounts of money to bail them out. And then you had the infrastructure bill. It's really a green energy bill, but that was about $2 trillion. And then this new thing, this new plan is about another $2 trillion. So you add that up. My point of this is Biden wants to spend 5 to 6 times more than Obama did. Think about that for a minute. He wants to outspend Obama 5 to 6-fold. I mean, the way I put it is Joe Biden is making Barack Obama look like Ronald Reagan in comparison. I mean, that's how completely absurd and dangerous this mission is that Biden is on. We've been paying people, I don't know if you can read this, it's kind of a cluttered chart, but it's one of the things that we did that was really, really stupid during COVID is we massively increased the unemployment benefits and other welfare programs. And so what we were doing throughout 2020 and throughout the first half of 2021 is paying people not to work. So we were giving people benefits in many states, a family of 4 with 2 kids and 2 adults that were not working. They could make $75,000, $80,000, $100,000 a year and not work a single hour. It was the craziest thing I ever saw. And that's why labor force participation collapsed. It's very simple. If you subsidize something, you get more of it. And we were subsidizing people for not working. We're continuing to do that. That's why one of the major challenges in the economy today is all of these welfare programs are paying people back to not to work. And that's why small businesses, construction sites, manufacturing firms, hospitals are having a really hard time getting workers back on the job because the government's paying people not to work. It's one of the dumbest things I've ever seen. We've changed welfare from being a hand up to kind of a way of life. You have people now for 2 years who haven't worked and just getting rental assistance, food stamps, unemployment benefits, cash payments for their kids. All of these things are really, really, really bad idea. And none of these have any work requirements. It's a really sad situation. This just shows you what happens to the debt. Well, I mean, basically showing the spending. We don't have a revenue problem. If you look at the yellow line at the bottom, that yellow line is fairly flat. It shows you that revenues over the last 40 years have been relatively constant. They've ranged between 17 to 20% of GDP, mostly in that 18 to 19% range. And in fact, over the next 30 years, they're expected to gradually increase, even if we do nothing. The problem isn't revenues. It's not that we don't have enough revenues, Joe Biden, it's that spending is out of control. So you can see the top red line is what happens if we pass the Biden budget, and then the spending just massively increases, and you'd have to raise tax rates, not just on the rich, but everybody to 50% or more to pay for this spending blitzkrieg that is so dangerous. I want to make a few other points, and then, this is just such an obvious thing, but I thought you can enjoy seeing this. We have a Democratic Party that wants to move the country more in a socialist direction. I mean, it's just a fact that when they're proposing all of this new spending, all of this new regulation, all of these massive tax increases, that's moving the United States in the direction of less economic freedom and bigger government. And you can see here, I mean, it's just a simple graph, but it shows you that that's moving us in the wrong direction. So the red pillars are the per capita income in countries based on how many are free. So the ones on the left are the most free countries. Those are countries like Switzerland, Hong Kong, Canada, the United States. And then you see the ones on the far right are countries that are purely socialist, communist countries like North Korea, some of the African countries, Cuba, and so on. And this isn't complicated. The more economically free you are, the richer you are, period. End of story, hard stop. This isn't complicated. And what Biden is doing is moving us from the left side of the screen more to the right side of the screen. How stupid is that? I mean, it's not. Now people say, well, we have to do that for social welfare reasons, for more equality, better health, better environment. No, what this chart also shows is that free countries are also healthier countries. They have better environments. They have longer life expectancies. They have a lower, infant mortality rates. Almost every single socioeconomic measure of how a society is doing beyond just how they're doing economically shows freedom is what creates a better environment, longer lifespans, all of these things. So it just makes no sense to me that we would want to move in the opposite direction. In fact, I was fortunate enough in my lifetime about 25 years ago, I befriended Milton Friedman, maybe one of the top three economists in the history of the world, maybe up there with Adam Smith and John Maynard Keynes. And, I remember Milton towards the end of his life, he said something really profound. He said, look, the most important economic lesson of the last century, especially, he was saying this around 2000, so he's talking about the 20th century. The predominant theme of the 20th century that you would think everyone would have learned, because it's as plain as the nose on your face, is that free enterprise works, and socialism, communism, Nazism, Maoism, whatever you want to call it, those are all failures. And yet, for some reason, the left seems to have learned exactly the wrong direction, and they want to keep incrementally moving us in the wrong direction. And that's frightening. I love this great country of ours. Yesterday, we celebrated or memorialized, the Pearl Harbor attack. Americans, the greatest generation rose, and we defeated, Stalinism and communism and Nazism. And that's been the story, is that the United States came out of that as the world economic superpower. We've got to continue with that status, but we're not going to if we continue to grow our economy. I'm just going to show you a couple more things, and then I want to open it up for some questions. You can see there are a lot of charts here that don't have time. I mean, this is just another example. I mean, one of the things they want to spend hundreds and hundreds of billions of dollars on is more education spending. We all want our kids to get the best education possible. I have 5 boys, so I want them to be as well educated as possible. But this is just showing you, just dumping more money into the system does not work. It doesn't work, folks. All we've been doing for the last 40 years is spending more and more and more money on the government schools. And you can see the green line shows that we've almost doubled in, per capita, per student adjusted inflation spending is more than doubled. And over that period, test scores keep falling. And so this idea that just more government spending is going to solve our problems is completely wrong. We just need to give parents more choices about where they can send their kids to schools. A few more, and then I'll stop. One in particular one. Oh, this is just a recap, and this is really important. Maybe I can end with this. This is just a recap of what Biden is proposing to pay for all of this massive spending. And I'll give you, this is what Biden has proposed, and I'm going to give you my prognosis about where we are likely to end up. So if you look at the first bars there, they're the corporate tax rate. We lowered the corporate tax rate under Trump. I was very involved in that with Larry Kudlow, and we helped sell Trump on this, and we lowered our corporate tax rate to 21%. And my God, it was like the most spectacular success. We just had all of this capital from the rest of the world come in the United States when we went from the highest corporate tax rate country in the world to below the average. And so it just sucked capital and jobs into the US. I mean, I used to tell President Trump in the Oval Office, I said, sir, this is working even better than we thought. It's a magnet for capital. And now Biden has proposed a 28% rate. I don't think they're going to get that. I think that they will probably keep the rate at somewhere near 21%, might go up a little bit, but not hugely, maybe at the most 25%. But they are proposing a minimum tax of 15%, which I can live with that. You know, I can live with requiring corporations to pay 15% of their income in taxes. The small business tax, this one's really worrisome. So the Biden proposal was to raise we cut the small business tax from 40% to 30%. Biden now his plan was to raise it up to 42%, but now they've got these new surtaxes that Biden is proposing. Now, these are on people who make over $1 million, but those are a lot of our most successful small businesses, the investors and the owners and the operators of small businesses, which create 60% of our jobs. Now, Biden wants to take that up to 55%, which is just absolutely outrageous. And that is going to have, according to the Wall Street Journal, that would be the highest tax rate on small businesses in the world. We're supposed to be the land of the free, and we're going to have a higher tax rate than China and Russia and Sweden and all these other countries. That makes no economic sense. It's an economically masochistic policy that will hurt America. And then the capital gains tax, you know, Biden wanted a plan that would raise the capital gains tax to 42%. I don't think that they're going to be able to do that. I think they might raise the capital gains tax up to about 28%, which is bad. We should get the capital gains rate down. I'd like to see a 15 or 20% capital gains rate, but I think they're going to end up somewhere between 25 and 28% on capital gains, which is just negative. If you own stocks and you raise the capital gains and corporate tax rate, that's just money comes right out of your returns on your stock. And then the other piece of pretty good news is that they wanted this massive new tax on unrealized capital gains that you would have to pay at death. And they were even talking about requiring shareholders to pay tax on unrealized capital gains every year. There was such a negative outcry about that among investors and the public that it looks like that idea is dead. So we are still looking at a major tax increase, but thank God it doesn't look like it's going to be as bad as we thought. I'll just end with this. Why are we raising tax rates? The lesson of the last 100 years, this is just over the last 50 years, lower tax rates are actually associated with higher revenues because there is a Laffer curve effect. And when you raise tax rates, you reduce economic activity. You know, I mentioned this, when you subsidize something, you get more of it. It's also true if you tax something, you get less of it. That's why we tax cigarettes, because we want people to smoke less. Well, we in the 70s, we had a top tax rate of 70%. It came down to 28% under Reagan, and it's remained fairly low. And look at the share of taxes paid by the 1% over that period. It has increased even as the tax rates fell. If you look at the very right end of that, you can see when we cut the top tax rate from about 41% to 37%, guess what? The share of taxes paid by the rich increased. So bottom line is, I'm going to stop and say this, that I believe that there is a 50-50 chance that we could kill this bill altogether. Inflation is a huge problem, and the worst possible thing we could do right now, if you're concerned about inflation, which almost all Americans are, would be to pass another $3 to $4 trillion debt bill. I mean, that's just, you know, the dumbest thing I've ever heard, right? If you spend and tax and borrow and print $4 trillion more money, by definition, that's going to make inflation a lot worse. So I don't think that they're going to get that. I think there's a 50-50 chance that American people just say, no, this is ridiculous. This is outrageous. We're not going to go for this. We have to peel up one Democrat in the Senate. I think it's doable. I think it was maybe and by the way, if one Democrat walks away from the table, then 8 to 10 will, because the bill is extremely unpopular with the American people. But we will see. So keep your eye on it, folks. I think it's going to have a big impact on your investment returns. If we can defeat this bill, and then, you know, you're looking at massive gains for the Republicans in Congress in 2022, then, you know, we're sort of out of the woods, and we're not going to see a major contraction of the economy, as I fear would happen if we do pass this bill. So that's my story. I'm sticking with it. And thank you so much for watching. If you want, again, last time I'll say this, if you'd like to get these slides and you'd like to get more of them that we put out every morning, email me at smoore, SMOORE at freedomworks.org. That's smoore at freedomworks.org. And I will gladly get you signed up for that. So I'm going to stop there and see if we have maybe a few minutes left for some questions or comments.
Hi, Stephen. That's fantastic. Thank you so much for your presentation. I think I have about 1 minute, to be honest with you, but let's go ahead and I'm going to put this one to you. Linda is asking about, you know, Biden's policies artificially inflating gas prices due to the fiscal policies of shutting down pipelines and controlling drilling, et cetera. She's asking about how will this affect our economy going forward, both short term and long term?
Well, you know, I didn't get into the energy policy, but if you ask me what is the most, you know, diabolical anti-America position of the Biden administration, it is what they're doing to America's energy. I mean, I could spend a half hour talking about this, but basically we have a war going on against American energy. Look, folks, I don't want to get into the debate about climate change. I'll simply say this, that, you know, it doesn't matter what the United States does when China's pollution levels are 5 times higher than ours are. And China doesn't care about climate change. They don't care about reducing their carbon emissions. They care about global domination. So we are step by step dismantling American energy in a very, very dangerous way. If we continue to do that, gas prices will go up. We will re-empower OPEC to have control over global oil markets. Again, when I used to see Trump, I'd say, you know, sir, because of our energy policies that you put in forward, we are no longer dependent on other countries for our oil, gas, and other forms of energy. And we have sacrificed that. And it just makes no sense. We're building pipelines. We're allowing pipelines to be built from Russia to Germany, but we can't get pipelines built from North Dakota to Houston. How stupid is that? It really is. So contrary to America's economic interests. Incidentally, we're the country that's reduced our carbon emissions more than any other country over the last 5 years because we've moved towards natural gas and away from coal. And now because they're restricting natural gas, the world's using more coal. There's a big article about how Europe is now totally dependent on Russia for their energy. And so Europe is using more and more coal. Exactly the opposite of what you want if you're concerned about climate change. So America should be all in on producing all the energy we have: oil, gas, coal, nuclear power, wind, solar, use it all. But if you actually believe, folks, that we're going to be able to empower a $22 trillion industrial economy that makes cars and machinery and construction and technology and all of the things that we have in this country with windmills and solar power, you are smoking something, or you must think that Al Gore invented the internet. I mean, that is just a fantasy, and it will do very much damage to the economy. So hopefully, Biden will reverse some of these anti-American energy policies.
All right, and let's end on this, being that this is an investing conference, right? And our audience wants to know what asset class, in your opinion, what asset classes are the best place to invest right now?
Oh boy, that's a tough one. I'll just say this about, I'm not a great stock picker by any means, so please, don't necessarily put too much weight on my opinion. But I will say this, I do think that the stock market is very high right now, and I'd just be cautious about it. I'm not saying pull money out. I wouldn't be flushing money into the stock market right now. I do think a correction is coming. I don't know when. I don't know if it's coming next week or next month or next year, but I do think you'll see, a fairly significant correction because once you stop flushing all that free money in the economy, it causes a crash. I like real estate. I think that's just a really good thing. I'm in South Florida right now. I'm in right outside of Naples. I mean, my God, you can't even find a house. There's no inventory available in Florida, in Texas and Palm Beach, forget about it. People are knocking on people's door and asking how much they sell their house for. So I do think real estate is a good hedge against inflation, a hedge against a kind of financial disaster. And so I do like that. I certainly would. And last thing I'll say, I think you're crazy to buy any government bonds at this point. You're just crazy. I mean, come on, 2% return on government bonds. Do people really think that over the next 10 years, our inflation rate is going to be less than 2%? Really? So that means, you buy those bonds, you're going to lose money, folks. Don't buy government bonds right now. That's the worst possible thing to invest in. I hope, by the way, I do think we're going to, I do believe in America. I do think despite all the crazy things we're doing in Washington right now, there will be a policy correction. And I think that when that happens, I think we'll get back on the right road. But right now, it's a very, very dangerous situation. And that's why I showed you these charts, because the decisions we make over the next 4 weeks in Washington are going to have a big impact on the stock market for the years and decades to come.
Stephen, thank you so much for joining us today.
Thanks, everybody. Merry Christmas. Happy holidays. And again, if you want the slides or you want the hotline, go to contact me at smore@freedomworks.org.
Fantastic, and happy holidays. Thank you so
You
much.
too. Bye.
And bye-bye. Ladies and gentlemen, thanks for attending this session. We appreciate your support. I hope you're enjoying the show, and we'll see you at the next session.